Hello and welcome to DigFin Vox, Voices in Digital Finance. I'm your host, Jame DiBiasio. If you enjoy the program, like, share, subscribe. My guest today is Kalidas Ghose, co-founder and CEO of Uno Digital Bank, one of the 6 digital bank licensed in the Philippines. Uno just received $32 million in a pre-Series B round, so I spoke with Kalidas about how he's using the money, growth prospects, and the race for profitability. Kalidas Ghose from Uno Digital Bank. Welcome to DigFin Vox.
Thank you, Jame.
Great to have you here. Are you calling in today from your Philippines operational base or from your headquarters in Singapore?
I'm actually in Philippines, Jame. We are in our lovely office in Bonifacio Global City in Manila, in Philippines.
Okay. Yep. I've been to that part of town before. Yep. Terrific.
Yes, and just immersed with my team members,
okay.
And then feeling nice and warm about all the exciting stuff they're doing all around.
Well, we're going to get into that. So I guess congratulations. I think what kicked this conversation off was the news that Uno Digital Bank raised more money, this time $32.1 million VC raise. And your total funding is now about $75 million that you have raised over a series of fundings. So let's start with the premise of this latest funding round. You guys said you were going to put this money into the lending side of the business as well as other products. I think you mentioned insurance. Then I think what the part that you're most excited about is the business offering side. So just where do you see there's 6 licensed digital banks plus a bunch of e-wallets and other digital type of financial services in the Philippines? Where do you stand in that? What is your competitive offering? What's special about Uno right now?
Yep, I guess to start from the very beginning, I guess the purpose of establishing a bank like Uno, what really attracted us to the proposition that we have in Philippines is the fact that with almost 35 years of the development of retail financial services, especially retail banking in Philippines, the banks have covered, or they are kind of serving approximately 15 to 20% of the population, around 15 to 18 million people out of the 75, 80 million odd adults that populate Philippines, out of the 120 million total number of people who live here.
Yeah,
the various reasons, the economic models that the banks follow are probably not very conducive for serving the millions of middle-income Filipinos who obviously have banking relationships that may not fit into the economic model of the Main Street banks. So many of them are actually approaching the local informal lenders and borrowing money at a very high cost. They are not able to take advantage of banking services for their daily financial transactions. They are probably not being able to have access to some of the investment or insurance products that maybe the more affluent customers in this market have. And that seemed to be an opportunity because those services, those products, customized in a suitable manner for this segment can be brought to them on a digital platform and on an economic model which is far more conducive, far more appropriate for serving the segments that we are targeting. So that was the whole idea and the opportunity that we spotted. And that, of course, is very similar to opportunities that exist in similar developing markets in whole of Southeast Asia.
Yes.
But obviously, that was very pronounced in Philippines, given the size of the market, the number of people who live here, the growing GDP, and therefore GDP per capita, and the revenue pool and the profit pool that it presents if we are able to execute it well.
Yeah.
So that's what attracted us to this market about a couple of years back. And then we were lucky to be beneficiaries of the progressive thought process of the regulators in this market who came up with a digital banking framework. Must say some of the markets that we are also aware of, without naming them, where similar opportunities exist, but they are not being tapped adequately because the regulators haven't moved with the same speed as the Banco Central ng Philippines over here in this market. So
about that thesis. I just want to ask you about this, Kali, because that thesis is probably true for all of the digital banks in a broad sense. And
Yeah.
and it's true. I mean, I wouldn't dispute anything that you said. But Fitch came out with a report at the end of last year that using Banco Central Filipinas data suggested that all of the digital banks were really very tiny amounts of overall share of deposits. So uh, what has to happen to create a critical mass, both for your bank and for this sector in general?
Yeah. So I guess the way to look at this, the success of the digital banks or their contribution to the economy would be more in terms of numbers. Because if you look at the average relationship, the very fact that these customers are not being served is because their average ticket size, their average relationship size, whether it's on the deposit side or on the loan side, are lower than what the affluent segment would have. So therefore, that's one of the reasons why they are not served. So I guess a percentage of total deposits would not be a good measure to look at the success of the digital banks. What we need to see is that, look, the combined number of customers these banks are serving in less than 2 years of operation on an average, I guess
Mm.
it's around 1.5 years to be precise, are nearly 8 to 9 million customers, which, if you take the adult population, is already more than 10%. And that is beating banks which are operating in this market for more than 30, 35 years. So the growth rate of the digital banks in terms of acquiring customers and serving them is definitely very, very impressive, and definitely even beats probably some of the market expectations. We did not expect ourselves to be 1.2, nearing 1.3 million customers already. So I would say that in serving the customer base that these digital banks intend to serve, they are probably gaining rapid strides. In terms of their balance sheet, I don't think digital banks are known for building large scale, fast growing balance sheets as probably banks focused on commercial lending, serving large corporates would be. So that may not be a right measure by itself. But even on that count, I think if you look at deposit basis, in a short time frame, the combined deposit book does seem to be reasonably strong compared to what the market size is. So therefore, I would still be absolutely confident about the progress digital banks are making, especially banks like Uno with a very strong and a very well-defined strategy and a strong focus on that and executing the strategy. So I would actually disagree with that report in stating that the digital banks are too small. They are definitely not small by number of customers, which is the key parameter to measure.
Okay. Number of customers versus, but size of deposits at some point has to come into it because you need obviously deposits to fund your business. So
And
what are you doing
if
to,
you
I guess?
look at it, but if you sorry to interject, but if you look at it, the deposit books of these banks are growing at a faster pace than their assets, and the assets are growing at a reasonable pace by themselves. So I don't think by deposits we would ever compete with commercial banks for taking a larger share of the pie. The market is
Yeah.
deep enough. It does seem to be very sensitive to pricing, which digital banks can afford to offer because their cost base otherwise on infrastructure and other overheads are pretty low. So they can pass on that benefit by offering to the depositors higher rates of interest, and that seems to be working very well. I mean, some of the banks have even crossed $500 million in terms of, or nearing $500 million in deposits in less than 2 years of operation. So the pace of growth of deposits is certainly appropriate for creating the intended balance sheet. It may
Yeah.
not be big enough compared to the large scale commercial banks operating for decades in this market. And the pace is adequate for executing the strategy which most people, especially our bank Uno, that we have.
Okay. And of your 1.2 million account holders, how many of these would be unbanked previously? I mean, are these really new, whether they're individuals or small businesses? Are these people new to formal banking, or is it a mix?
Difficult to measure to get an exact pulse of that number, but we would assume that it would be in excess of 50%, probably closer to 60%, who are opening a bank account for the first time through us. Some of them may already have an account. Around 40 to 45% people might actually have another bank account already. But what is very clear is that most of them, at least more than 90% of them, even if they were in possession of a bank account, some of them, they were not using it to the extent that they should in terms of their daily financial life, in terms of their financial transactions that they carry out on a day-to-day basis. That's what Uno aims to do, is to provide them with a platform where they can not only do these transactions conveniently, they're also motivated to do so because there is a financial benefit and there is an ultimate lifestyle benefit for doing so,
Yeah.
for using a formal financial platform.
Yeah. And what does that mean when you say a financial benefit? What are we talking about here? Are we talking about basically
So
just
in some way,
higher rate, yeah. Go ahead, please.
yes, we offer higher rates for the interest on the money that they keep with us. We do offer higher cashbacks for the money that they save from the account that they have with us. So what we call, usage benefits, or either delivered in the form of loyalty points or in the form of cash, in the form of cashback.
Mhm.
We also offer benefits of, the financial consultancy, like planning of their personal budgeting and things like that, which otherwise would have cost them at least some servicing fee. We offer protection products, basic protection products like health and life, which comes along with their relationship with us, and maintenance of certain balances that come all free of cost to them, that are bundled with the account.
Mhm.
We do offer benefit waivers on fees on certain types of transactions, on a lot of transactions that they can conduct, which they can avail. We also offer subscription services through which, their regular subscriptions can be cheaper. So essentially, our motto is to deliver a message that they will earn more if they spend, they'll earn more if they save. So
Yeah.
either way, the customer benefits by having his relationship or her relationship with us at Uno.
What's the funding model that you're using? Because I guess initially there must be, you're providing some benefits that had to be paid for. So, and with a fairly limited deposit base to begin with. So how does this get funded straight out of the money that you raise from third parties, or are you borrowing it? How do you keep the wheels turning here?
Oh, well, our deposit book is actually growing reasonably fast. In fact, we are now ramping up our asset strategy to keep pace with it. We
Okay.
have crossed $100 million a couple of months back. So our monthly deposit rate is now reaching between $8 to $10 million for increase in the book. So new
Mhm.
deposits are about 16, $17 million net of attrition of the existing book. We are growing between $8 to $10 million per month. So at the moment, we are lending about $4 to $5 million. So we are well funded by the deposits we are raising in the market, and that too at a fairly moderate cost. Of course,
Yeah.
higher than the local traditional leading commercial banks, but with respect to the average bank rate, we are moderately high,
Yes.
paying moderately higher interest, but we are able to raise money quite, I would say quite liberally.
Yeah. I want to go back to that Fitch report in terms of on that lending side. They noted that in aggregate, this is from September, I think, of 23, the NPL for online bank customers, the non-performing loan ratio was about 8.5% compared to only 3.5% for the traditional lenders. That's a big difference. 8.5% is a high uh, rate of people not paying back on time. So what are you trying to do to mitigate that? How sustainable is the business if those NPLs remain at those high levels?
Yep. So I think that is going to be a challenge when you are entering markets which are not served well by the banks. One, of course, is the economic model, but also is the risk appetite. Is obviously got to be covered. Now, first of all, I think the NPL numbers for traditional banks are also somewhat tempered down, somewhat muted by the presence of large corporates there. So, on a like-to-like basis, if you're looking at retail, it might be, the difference may not be that big.
Okay.
It might still be there with the traditional banks who are obviously more conservative, and digital banks opening up the, entering markets which have not been entered before. So in this regard, actually, the industry has to really take certain steps, and we are trying to gather support, gather momentum around the whole industry as a group for probably persuading our regulators, our industry players, our intermediaries, etc., to take steps for building the environment for the NPLs to come down. For example, I think the introduction of the unique national ID
Mhm.
in Philippines called PhilSys ID would definitely make things easier, because right now as many as 12 IDs, 12 types of IDs are recognized by the government and by institutions in general. We accept only five, but there are 12 types of national IDs available. And of course, that makes it harder for banks to relate one customer to the other,
Yes.
and prevent delinquent customers taking money again, borrowing money again. So that's one innovation we are waiting for. The other is, of course, contactability of customers, especially in unsecured lending, which is always typically the lead product for bringing customers into financial
Mhm.
inclusion. Their linkage to your SIM card of your national ID is very, very critical. It is beginning to happen in Philippines, but again has to be strengthened further, has to be covering the entire population, has to be grandfathered to cover the existing subscribers. So all of that need to happen. The credit bureau is now beginning to get more and more sophisticated, but has some limitations in coverage because it doesn't cover finance companies and their databases. So the credit information center supporting the credit bureaus have to make sure that credit information is available widely. Some degree of lender protection has to come into being because today there are little recourses available to institutions if a customer borrowing on an unsecured basis is to go delinquent. So again, some degree of protection for lenders have to come into this to protect
Right.
the lenders who are borrowing to new customers without any prior credit history. So these are 3 or 4 areas where we feel that as the industry develops, as it grows, we will see a significant improvement in the NPL rates.
Yes. One thing that's really interesting about the Philippine digital banking market is the variety of the banks, you and your peers or competitors. They come from different types of backgrounds. Some are spinouts from the banks, some are from telecom companies, but Digital and also Tonic are really pure startups, VC funded businesses. So how does that, and you just did your latest raise. So how does that color the way your strategy is going to be different than some of the other digital banks?
Um, I would guess that in terms of our core strategy, we are different. We can be put into different baskets, not probably uniquely. Like there are digital banks which are being started by large conglomerates, which are essentially providing a banking platform to their ecosystem, especially for subscribers of their various services. There are banks which are probably more focused on remittances and on money transfers rather than on wholesome, complete banking relationship with their customers. And then there are banks like us, which are looking at offering a unified banking interface, unified financial interface to the segment that we are looking at by taking care of every little financial transaction, every moment of their life, so to say. That's our buzzword on the floor of UNO is to serve our customers at every moment of their life and improve their living and lifestyle. I guess the difference which would these VC-funded institutions or VC-funded startups like us would have is that increasingly there is focus on profitability.
Right.
Where we are helped by in this shift in focus from maybe pure acquisition focused strategy to a more profitability oriented strategy or viewpoint is that we were, by being bankers ourselves and not coming out of technology or any other related field to digital banking, but directly coming out of banking itself, and that to large multinational banks where every business, every segment, every channel was being looked at for return on the assets, return on the investment. We are completely focused on that profitability aspect as we build our bank, not just in terms of sheer acquisition of customers or building our balance sheet through them, but actually making sure that our revenues are good enough to cover our overheads and our variable expenses and make profit. So that's where I guess our investors also find us as a suitable target for their investment because we are aligned with that viewpoint.
Yeah. And where are you on that path? How far are you from breaking even or turning a profit?
We are looking at a profitability sometime before the end of this year, or
Okay.
maybe at worst sometime early next year, which would be approximately 2 years from the time that we launched our business, which would be quite an achievement compared to the track record for digital banks across the world, and
Yeah, definitely.
definitely something which should make our investors, I'm sure, quite happy.
Yeah. Uh, I notice you also have some interesting partnerships. So just to frame this, some of your digital banking competitors do have about 5x larger deposit base and asset base. So for example, Maya Bank, which is affiliated with the e-wallet company Maya, but you have a relationship with Maya's big competitor GCash, which also has a telco banking, but obviously another big wallet. Can you just tell us a little bit about, uh, is that a very specific product matchup with GCash, or do you see you guys doing more together?
We did. I mean, the partnership with GCash is actually based on very, I guess, symbiotic principles. So We do offer value-added services to their customers, but more importantly, by being a digital bank of the modern era and having entered the business quite recently, we do have a tech platform which is very versatile, which is quite agile in building or implementing these partnerships in a seamless way. So I guess what really appeals to our partners, especially partners like GCash, uh, who are who are on a digital business platform and therefore care a lot about their customers' experiences. They find our platform to be quite agile and flexible, to be able to design customer journeys which make it a frictionless, seamless journey for their valued customers. So if you look at it, we in a very short span of time have become a leading choice on the GCash platform for their customers to open their savings accounts with us, because even GCash feels that our journey that we have implemented is extremely suitable for the customer. It's very flexible, it's very agile, and the design is very digital in the nature. So customers prefer us, and therefore GCash prefers us. Is the way that it normally works out, and that is true for others as well. Like Trusting Social, one of the leading scoring agencies, for example, credit scoring agencies, and now venturing into data analytics, and Gen AI as well. They also found us and we are their exclusive partner for 10 years in Philippines. They also found us suitable because we were very quick to respond to their requirements. We were very quick to design and implement journeys of customers on our technology platform, which was helped by the very nature of the platform that we have set up. And they were, very keen to deal with us and us alone, because they didn't find anybody else catering to those requirements as well as we could. So I guess it's our capability on the technical front, coupled with our business experience, by which we are able to make customized offers for the customers of our partners that make us first choice among our partners that we intend to tie up with.
Kali, before you became full-time chairman and you were also working in Vietnam. You spent a few years at FE Credit. Tell me a little bit about that experience, and what are some lessons that you learned from working in Vietnam and their fintech scene? How much of that can you translate into learnings for Uno, either things to do or things not to do? Or is it such a different market that it's hard to make an apples to apples kind of comparison?
So yes, I think the inspiration for me teaming up with my co-founder Manish and looking at Philippines was largely due to the experience we have had, or I personally had in Vietnam for the last almost 17 years living in Vietnam, but 12 years in FE Credit, and before that another startup which is now called Shinhan Finance, used to belong to the Prudential Group. And in both these two startups, both Prudential and FE, I was the founding CEO, and both of them rose to number one number one position in the market during their time. FE Credit being one of the largest, if not the largest, consumer finance company in whole of ASEAN, with more than 50 million customers and more than $3 billion in balance sheet. From learning from that experience, obviously there are many lessons learned, both in terms of building an organization and also creating a customer franchise, and generating creating wealth for the shareholders and creating value for the customers. Some similarities between Vietnam and Philippines, I would say largely they're similar in terms of the constitution. There's the open opportunity, the vacant space left by the commercial banks in terms of having a large underserved, underbanked market. In Vietnam, maybe the credit bureaus are a bit more advanced than what they are right now in Philippines, but I think it's making large progress. As I mentioned, unique IDs is a very critical factor in lending. That is quite well established in Vietnam, and it is getting digitized very rapidly. It is getting done in Philippines as well, but again, maybe a little bit of distance to catch up. Lender protection, I guess, again, is significantly strong at the moment in Vietnam, though there's some distance to cover. Similar is the situation in Philippines, where a lot needs to be done over there. Telephone number linkage again in Vietnam is getting established, maybe again a little bit more advanced than Philippines. So in certain areas of lending, I would say that Vietnam has probably a bit more conducive, supportive environment for lenders. But I guess the changes are happening in Philippines, especially under the aegis of a very progressive central bank, we can look forward to days when Philippines lending environment would be as good as anywhere else in the developing world.
Yeah. Obviously, the identity factor is very important. You've mentioned that twice now. Any other initiatives that you expect from BSP, the central bank, that will have a material impact on digital banking?
I think open finance would be a very critical area. They have created certain sandboxes. We are participating in them. And maybe especially for new entrants like us, a large amount of data which our customers may have created with formal and informal institutions would be a great help in us delivering better product services to them. Open finance would work only if the participation is widespread, is wide. It covers a wide range of institutions. There is wide participation. We do hope that the BSP would be able to motivate other regulators in this market, like the SEC or maybe other relevant regulators, to participate. Even the government institutions like Pagibig, which extends loans, if they are all participating in the same ecosystem on the same platform, it will ultimately benefit the customers, but it will certainly benefit the financial institutions as well.
Yeah. One reason that digital banking in the Philippines has had such a great opportunity is because the traditional lenders have not invested much in this space, particularly in comparison to some of the other markets around the region. But open banking requires the traditional players to also be willing to share their data because they've got the most. Are you optimistic that some of these banks will they'll understand it, they'll be able to invest more in their own system so that there's consent and other aspects that go into sharing data?
Well, I have seen credit bureaus make ground in at least four markets now, starting with my home country in India, and then in Vietnam, in Indonesia, and now in Philippines. And in all these markets, when credit bureau came in, even large established banks and even banks with MNC background were skeptical of sharing their data because they felt they're sharing more than they're receiving in return.
Right.
They're contributing more than they're receiving in return. But ultimately, I guess there is customer pressure and the need or the assurance that the improvement of the industry as a whole ultimately augurs well for each member of that industry, for each player in that industry, I'm sure will take ground. So it might go through an initial round of resistance like credit bureaus did, but like credit bureaus, we are quite optimistic about the development of open finance as well. For Philippines, it will also require the development of this whole aggregator layer, which in markets like India is already starting to develop quite well. I mean, in India today, the kind of information which one bank can get for a credit applicant regarding his prior history is amazing, about the credits into the bank account, the salary pattern, the income and expenditure pattern, etc. The kind of information which can be obtained, most of which is actually, in most occasions, actually result in a benefit for the customer. So I think if there is customer pressure, if there is industry trend, and if there is general benefit improvement for the industry, ultimately it will gain ground in Philippines as well.
Yeah. Just want to wrap up here, Kali. The fundraise that you just did, a lot of that's going to your business services side. Tell us a little bit about, I guess, the sari business, what that means in the Philippines, and maybe link that to the potential for open banking norms or other new methodologies where you see that business going to serve the SME segment.
Yeah. So, Jame, MSME is a very core part of our strategy because we believe we'll be able to attract a lot of customers with the benefits we offer to them, especially for banking with us, with their income account domicile. So we give higher interest rate on savings, we give higher cashbacks on their spends. So we believe that we will be able to acquire a lot of customers as the current trend shows. But we also understand that if we do not have an outlet for their main spend from that account, which is on their daily life, their retail expenses, their daily life expenses, we would not be able to become a primary bank for our customers. And in doing so, therefore, we do require to have the MSME segment as well on our platform. So we have developed we are in the process of launching a separate application, a mobile app for banking for these MSMEs, for these retailers, sari stores, as they're known in Philippines. We do believe that our lending model for these are more appropriate because it is structured as supply chain and not a pure cash advance to them. and it is also linked to their working capital and restricts their usage for building their inventory, which they can sell and make money. We also are linking up our end customer base and these retailers in a way that their payments can be streamlined. And ultimately, our app also offers them the ability to digitize their operations, acts as a mini ERP for them. So there are at least 4 layers of benefit, starting with credit access, starting with and then extending to payment platforms, extending to additional facilities on that app, which they can use for their business, and finally digitizing their entire operations. So we believe with the combination of a strong technology platform and a strong set of services and products, we will be able to serve the MSME segment and bring them on. And that will be one of our key focus with the funded by the new set of funds that we have raised recently.
Great. Kalidas Ghose, I'm really grateful for you making some time. Sounds like you've got a very busy year ahead. And of course, look forward to seeing you and your peers continue to bring the unbanked and make them the banked. So with that, thank you so much for joining me on DigFin Vox.
Thank you so much, Jame. Nice talking to you, and look forward to speaking to you again. Thank you.